All right, good morning, everybody. We're going to get started. Obviously, today's list of stocks to short is a monster list compared to the longs. The Obviously the market is getting crushed again this morning. Um, I think today is a good time for us to discuss and really be on top of how definite your trading plan is. This is going to be one of those mornings where because it is, what are we talking about now? The fourth or fifth day in that direction. We have one, two, three, well, I guess 5 out of 6 days lower. I actually ended yesterday saying that I thought it would be hard for us to justify short selling today's open, and I still feel that way. Quite honestly, I just don't think that. Um, I don't think that we're going to get a significant push lower after this gap lower, which is actually going to set up some interesting trades. I know, James, we had a couple of discussions about that yesterday in the afternoon about whether taking trades long that might be considered a short sale on the higher time frame was a good trade, and we made a couple of arguments for the conditions that you definitely could do that. So what I think is going to ultimately end up happening today, though, I think today's going to have some decent volatility. Because of how much we've sold off, and again, this is a part of reading, tape reading type stuff. When you get to the point where you're really conscious of how much further a stock, or in this case, the market, could move so many days in a row in the same direction, you get to the point where the odds of follow through again are not awesome in that direction. So basically, the odds of follow through for a profit potential diminish. So even though it might still be a sell short in this case with the market, it's a brain dead short. Everything is going down right now for the most part. The question now is it a smart sell short after this morning's opening? And it's really challenging because we've moved so much so fast in such a short period of time, and obviously with the China news and oil continues to go down, the news is really bad. We're not talking about one stock had a bad day and everything else is doing whatever it's doing. This is a global thing again. That being said, I'm not saying this to stop anybody from being aggressive or trading the open. What I'm really doing is I'm setting up the expectation that we're going to have some fast, good opportunities to trade out of the gate, and it's really just a question of whether you personally believe that you have. I don't know if the skills is the right word, but I guess it is. If you have the skills to make fast decisions, but more importantly, are you fast enough on the keyboard to make fast enough decisions to translate getting in or out of trades uh, uh, with that market volatility? Obviously, the VIX is rising, which is going to expand stop losses. So as the VIX rises, the average true ranges rise. Um, so that's going to be interesting. So I guess what I'm saying here is if you're trading with hotkeys and you're good with the hotkeys, you'll be in good shape for this morning. If you're trading point and click, you should probably step aside with the first 10 or 15 minutes worth of price action because it could be moving really really quick, unless you like lightning with the mouse. That's fine. But does everybody understand what I'm trying to say? Just do me a favor, type in yes, or if you'd like a little bit deeper explanation, because essentially what I'm saying is this is a professional traders open where we're going to get some volatility. I would be really surprised if we did not get good volatility in the first half hour today. But what I mean by that is good half hour volatility. I don't believe that we're going to get a a um, a strong push lower. After, maybe we will as soon as the market opens, but I expect that to be very short lived. You can see we have some support a little bit lower than we are right now. We're going to actually open up just below that 196 support, which is all the way over here. So I've been spending a lot of time and getting some really good um, feedback from you guys sending emails, and we're having email discussions and short Skype calls and that kind of stuff. Um, I spent a lot of time where I was trying to massage everybody into uh, slowly moving along, and I think that the market right now is not calling for that. The market's offering some opportunity. We can definitely day trade around some opportunity, um, and be in day trading mode. And as we start to get comfortable with each other, making out some more aggressive calls. Like, because I think today is going to be a little bit more of an aggressive play, where I think there's going to be some long opportunity today. Like actually, I think it was James yesterday, or James or Kyle, I'm not 100% sure, who had Facebook long yesterday in the morning. And even though Facebook, the 20 crossed over, and you could technically say that's the first part of a downtrend, we kind of made a decent case for why you could, be looking at that. It held the previous day's low, got above the previous day's low. We got out, we were looking at this double top here. I don't want to give the impression we're going to start taking every trade just because there's momentum. What I'm saying is, reading the tape this morning, the market is even though it's news, the market is way overextended today. And when you factor in the gap on top of that, we're probably going to get one push lower, and then it's going to be really interesting after the first 10 or 20 minutes to see how price action trades. So the way I normally teach it in the course, especially for newer traders, is we block out that first 15-minute candle when we get this type of extreme volatility. So you could either use the opening price or you could use the first 15-minute candle. And I'm going to explain why the 15-minute candle in certain circumstances, as opposed to just using the opening price. Think about the type of volatility that we could potentially have this morning. We could have a opening 15-minute window that's, and let's use the SPY as an example, it could be $1, quite honestly. So we would have the opening price, and actually, you know what? We'll do that on I'll pull up the 15-minute chart here so you can see exactly what I'm talking about. So let's say, for argument's sake, we're looking at this here, this candle, this 15-minute candle. We have the opening price and we have the 15-minute candle. What could happen today is if we gap lower, we know we'll have the opening price, but we could have a really big, let's say from here all the way up to here, opening 15-minute window. So what we want to be conscious of today, because of the volatility, is we want to pay attention to whether or not we're still inside that first 15-minute candle, or whether we're above it or below it to establish short sales or possible longs in an oversold market condition. Does everybody understand what I'm saying? Because we don't, let's say for argument's sake, that 15-minute candle is big and we're still trading within that 15-minute candle. We don't want to get chopped up with an intraday lack of bias. So instead of using the opening price, if the opening 15-minute window is big, we're going to use the opening 15-minute window as a reference point to say we don't have an intraday bias until we get outside of that window, as opposed to just using the open like we normally do. If we get a very tight 15-minute window, then we can make an adjustment like we normally do and just use the opening price. So what I'm kind of giving you here is an advanced way of not getting chopped up if the market doesn't move after the gap lower. If the market has a big opening range, which we're going to define as that first 15-minute window, and it stays within that window, no matter what's going on outside of that, we need to get out of that window to determine if we want to be long or short. If the market has a smaller opening 15-minute window, which I think with this volatility is unlikely, then we could use the opening price like we normally do. So I'm kind of giving you an advanced way of quickly looking at it and say, well, we're trading sideways for the first 2 hours. There's no market from the bias, so I'm stock only. And then we could even pick out some stocks that we could do the same thing. Now, you could use 10 minutes, 15 minutes. I just find 15 minutes to be a decent window. You could even use the first half hour, quite honestly. I know a lot of traders that use they use 30-minute candles and don't trade outside of that. They wait for the first 30 minutes to unfold, and then they look for a direction outside of that. So what I'm trying to do is I'm going to start sneaking in some advanced lessons that we can start to go over every single day, and each one of us recognizing it so that we can start to be like, I know what I'm looking at. My goal, my number one goal, is for you to start looking at the market and say, I know what the heck I'm looking at. It's just a question of getting follow through and good entries. When you wake up every day and you feel that way, then all the pressure of the fear of losses and all that kind of stuff, it goes away, because when you believe you can make money, then it's just a question of taking every trade that matches the strategy. But you can't do that until you have definite reference points. So especially, again, new year, new leaf, new goals, and all that kind of stuff. That's going to be our goal, especially for January, is really nailing those reference points. So you look at any chart, you know exactly what you're looking at, long, short, momentum trade, longer term order flow type trade, and then you'll know exactly what to do. So the more we do that, my goal is for you to feel like I know what I'm doing, I know what I'm looking at. It's just a question of follow through. So that's going to be the promise, especially here for the first month, and I'm going to keep sneaking these things in, and then we keep repeating them. So now out of the gate, in every stock we're watching, and then especially in the market, we're going to be looking at the opening price, and then we're going to also be looking to where price action is relative to that first 10 or 15-minute candle. So that's going to be big. We're going to keep an eye on both of those guys today. Everybody understand what I'm saying? So we got some volatility this morning. The thing is, I want everybody to be prepared for this morning. We're going to get volatility. I feel strongly about that, and I want to make sure that we're taking advantage of on both sides of the market. If you call out a trade that's long against what everything else is going down, if you can justify a long, we'll talk it through, and then we'll say, okay, it's an aggressive trade, it's long, but the market might be popping, and maybe we can get a small move out of that. If you're short overnight, Kyle, or even from pre-market, and you have, and let's say you have a profitable trade right now, the way I'm looking at the market right now, and the way I've always been taught, is the first push of the day. If you happen to be short, that should likely be one that you would tighten up your trailing stop if it's moving in your favor. And again, very similar to the trade that we talked about yesterday afternoon. I think it was EOG short. The market was selling off and EOG didn't move at the same time, but the right trade was to give the stock a chance to sell off with the market, and the market actually ended up bouncing, and you ended up getting stopped out on the stock. But the right trade was to give it room. You had to give it a chance. So if you're short already this morning, you have to see what the first push is. If the first, obviously the open here for most stocks is going to be lower. So if we open lower and push lower, when you think that initial push is slowing down, that's when I tighten up my trailing stop to take advantage of a good overnight short. That's how I'd be managing an opening this morning. And actually, Kyle, this is actually similar to the email exchange that we had about 10 days ago, because if we factor in the tape reading of the market right now, this is 5 out of 6 or whatever the number is gaps lower. So now we're getting to that extreme reading on the downside here, where how many more days in a row can it keep moving? Now, again, as I said yesterday, news trumps everything. So, news throws all normal stuff out of the window. However, we got lower, gap lower, gap lower, gap lower, and another gap lower this morning. If we gap lower in the stock that you're in and the first push is lower off the open, I would trail it all the way down to lock in as much of that profit as possible. Or let's just use simple numbers. If you have 300 shares, tighten it up on 200 and then see what you can get out of the balance on the 100. Because we're getting down to oversold conditions in a big way here. This is a pretty decent move. Okay, this is a pretty decent move. So the opposite of that is we could get some serious volatility in the opposite direction higher today, right out of the gate. And it's not necessarily buying as much as it's possibly short covering. And short covering rallies are always faster than buying. I know I mentioned quite a few times the book. Oh gosh, what's the name of it? The author's name is Humphrey B. Neal. You can pick it up on Amazon for like $7. It was written in like 1937. Oh God, I think it's called Stock. I can't remember. I'm having a brain fart. I'll look it up later and I'll email everybody. But essentially, he does a really, really good job of explaining the difference between a short covering rally and new buying, and essentially what short covering looks like. And again, short covering is after a downtrend. So we're having a big down move to the downside. So if the market rallies and it's fast, that's people covering their shorts quickly. If the market sells off and slowly grinds higher, that's new buying, because new buyers don't want to be aggressively pushing stock up on themselves. But people who are short and getting out of existing shorts are quick to do it, especially if they think the market's going to bounce. So you see the thought process, because just think for yourself. If you're long, obviously after you get in, you want it to go up. But we're talking about bigger money. If bigger money is pushing a stock around and they're covering a short, they want to get out. If bigger money wants to be long, they want to try and buy it on the way down, not on the way up, because they want to do it quietly as prices still go down. When the selling dries up, then they have to step up and start to buy it a little bit more. So I think this morning is going to be an awesome morning to really read the tape and then putting that in the context of what's going on over the last batch of days here. So, I hate to use the word overbought and oversold, and especially in this condition, because it's news. And the reason I hate to use it is because I don't want anybody getting out of a good short sale or a good long because somebody throws the terminology on there, it's overbought or oversold. However, what you do want to do is be aware that it's overbought or oversold, and just be conscious that you're reaching a point where there's a decent chance that it slows down, if not turns around. And if that happens, you're not bailing on the trade. You might decide to tighten up a trailing stop or scale out of a little bit. So that's going to be interesting to see, and especially monitoring this morning, keeping an eye on the 5-minute chart, because we'll see better signals, obviously, on the shorter time frame, because these 5-minute candles will complete obviously, and half the time is the 10. And then as we start getting closer to 10 o'clock, then we can rely a lot more on both charts. That's why I have both of them up here. So I think this is going to be an awesome, good, professional morning to trade. I think we might have some trades in both directions. I think we have some fast decisions. The list of longs compared to the list of shorts is, I think, 1/5. I think I have 17 longs and like 100 something shorts in here, something along those lines. So we're not. I'd be shocked if we don't have a lot to do today. And again, I want to go back to one of the first things I said before. This first half, I can't talk. This first half hour is going to require you know exactly what you want to do, and you're fast at not only processing decisions in your head, but also with making making the actual physical part of the trade, meaning you're good with hotkeys, or you're really fast with the mouse. So be aware of that. You know, the way I worded it in the blog post today was you want to pick the right fights. And if you're not 100% convinced you can make a very fast decision here in the first half hour, it's okay to step aside. We'll be able to find plenty of trades. If you are, I tell you flat out, most professional traders right now are, that are good at making fast decisions. They're looking forward to this volatility today, both long and short. Now, how that unfolds, think about it. 15 minutes ago, we already determined what we need to see. And that's the single biggest thing I want to get across to everybody. You know exactly what you want to see right now in every stock and every market. We're going to watch the opening price like we normally do, but if the opening 15 minutes is big, then we're going to use that opening 15-minute candle to determine our bias for the day instead of using the open. Everybody with me? That's very important that we're kind of expanding to add, if there's extra volatility early, how we're going to determine if we want to be long or short, in addition to whether or not we want to be long or short obviously on the higher time frames with the two lists of stocks here. So I'm pretty pumped for this morning. As you can see, haven't finished my coffee yet, but I'm pretty psyched. I think we're going to have plenty of stuff to do today.